On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. Let's take a look back at last week, then let's turn our attention to the week ahead. Equity markets. Well, starting with the US, the S&P 500 rose another 1.4% last week, hitting more record highs on the back of improving optimism around trade and a good start to the reporting season. European shares, UK shares also posted gains of 0.5% and 1.4% respectively. The Aussie market was down 1%, the local NZX 50 slipped 0.2%. The Japanese Topix index surged 4.1%. It was the star of the show last week, and that came on the back of Japan securing a 15% level of reciprocal and automotive tariffs from the US, and that was below the 25% that was previously threatened. So a pretty decent week overall for share investors. Interest rates were little changed. We saw the US 10-year Treasury yield finish the week at 4.4%, barely moved. Here in New Zealand, the 5-year swap rate was down only slightly. It finished at 3.6%. So running through some of the key releases, internationally, it was the flash PMIs that we were all watching, and they pointed to ongoing solid growth. These were for July, so one of the first indicators we've seen for the third quarter of this year, and they do suggest that things are tracking pretty well. PMIs improved in the US, in Europe, and in Australia. Japan was unchanged, and the UK slipped back ever so slightly. However, all of those regions were comfortably in expansionary territory. Readings were all above that break-even level of 50. The US was particularly strong, which is obviously good news. The world's biggest economy, world's biggest share market. The composite PMI in the US accelerated to 54.6. Well above 52.9 last month, well above the 50 break-even level, and the highest that we've seen since late last year. However, growth was a little bit uneven. It's still very reliant on the services sector, and inflation pressures also intensified. Companies attributed those higher cost pressures to tariffs and increasing costs of labour, so it wasn't all good news. The central banking highlight was the ECB, the European Central Bank. It left interest rates unchanged. That was widely expected. So the EC policy rate sitting at 2%. It has cut it 8 times since it reached 4% last year. That was the highest we've seen since the euro currency came into being. So it's gone from 4 down to 2, but they're on hold now. And markets still see one more cut this cycle from the ECB. So markets think they will end up at 1.75%. However, that might not come until late this year or even early next year. But at 2%, much lower than we've seen in recent history. Here in NZ, it was all about inflation. We got the Consumer Price Index report for the June quarter, and the CPI increased 0.5%, and that saw the annual headline inflation rate increase to 2.7%. That is the highest that we've seen in a year, and it's starting to get towards the top of the RBNZ's target band of 1 to 3%. So that's what they're tasked with, keeping inflation within 1 to 3%, and we're in the twos, but sort of near the top of that range at 2.7%. That was actually slightly higher than what the Reserve Bank was expecting when they last did some forecasts back in May. However, it was slightly below the 2.8% that economists were expecting. So I don't think the Reserve Bank will be too bothered by that. They would have expected it to be a little hotter than their forecasts, given what we've seen since they put that monetary policy statement out in May. So so it won't be a great surprise. And the odds of another cut to the OCR in August, when the Reserve Bank next meets, are still high, and actually rose on the back of this CPI report, because even though it was a little higher than what the Reserve Bank was expecting, it was below what markets were expecting. So at the moment, people are picking about an 85-90% chance of an OCR cut in August. So it's almost fully priced. That would take the OCR to 3% by the end of next month, and it looks like we might get one final cut after that too, at least according to market pricing. So that would suggest we'll end up with a trough for the official cash rate this cycle of 2.75%, sort of near the end of this year. The next really important release for the Reserve Bank for the OCR outlook will be the June quarter labour force report, the unemployment report. That is out next Thursday, the 7th of August, so we'll be watching that one too. So that was last week, and in terms of looking ahead, trade negotiations will obviously be in focus. They'll be front and centre. We've got those August deadlines looming, 1st of August for a lot of places. I think it's the 12th of August for the US and China. Markets are particularly focused on developments between the US and the European Union. And you've also got talks between the US and China taking place in Stockholm early this week. So we'll be watching for any developments between the EU and the US, or China and the US, as the week progresses. Outside of trade negotiations, there is plenty going on. We've got economic releases, we've got central bank decisions, and we've got loads of earnings reports. So a lot for investors to digest. Starting with the US and starting with economic releases, we'll have the PCE inflation report for June. This is out overnight on Thursday. Markets are expecting it to pick up a little bit. The headline PCE inflation rate at an annual level expected to rise to 2.5%. That would be the highest since February. Core inflation expected to remain unchanged from the previous month at 2.7%. So that would be broadly similar to what we saw with the CPI inflation release for the same period, and not too bad, still in the twos, but creeping up a little bit from where we have been. So that's on Thursday. On Friday, the data dump continues. We'll get the manufacturing survey from the Institute of Supply Management, the ISM survey, and we will get the jobs report. Both of these will cover July. Now, the ISM has been in contractionary territory for all but 2 of the past 32 months. However, it was the highest in 3 months in June. It rose to 49, which is good. The ISM Services Index, which has been much, much stronger, that will follow next week. So it's just the manufacturing one that we'll get this week. That's on Friday. Also, the non-farm payrolls report, and markets are expecting roughly 100,000 new jobs to have been created in July. That would be the weakest we've seen since October last year, so it would be off the boil quite a bit, and it would see the unemployment rate push up to 4.2%. It's currently at 4.1%. So we'll be watching all of those things late in the week. Also, a couple of really big monetary policy decisions coming up. One in the US from the Federal Reserve, and one in Japan from the Bank of Japan. Now, the Federal Reserve will obviously be the main event, and its decision will be released at 6 a.m. on Thursday, New Zealand time. We won't get any new projections for this one, so it will just be the statement and then the comments from Chair Powell in the press conference, and that will follow at 6:30 on Thursday morning, New Zealand time. Markets are still expecting a couple more cuts from the Fed this year. 44 basis points are priced in over the balance of this year, so that's roughly 2 more 0.25% cuts. That would take the Fed funds rate from its current 4.5% to 4.0%. However, no changes expected this week, so the Fed expected to remain on hold. The next move is expected to come probably in September. At the moment, pricing is sitting at 65%. So markets believe on hold this week, but they see 2/3 of a chance of a move in September. Looking out to October, a move is fully priced by then. So that's the Fed on Thursday morning. Be more about the commentary, be more about the statement. The BOJ, the Bank of Japan, it is expected to leave policy settings unchanged. It is moving to normalise interest rates, to raise them, but it is doing so very cautiously. And the BOJ is also on Thursday. It'll be later in the day. So you get the Fed in the morning, and then that afternoon you'll get the Bank of Japan. Here in New Zealand, the economic highlight will be the ANZ Business Outlook Survey for July. This is out at 1 o'clock on Wednesday, and we'll be watching for any increase in business confidence. It has been very sluggish these last few months. The June quarter is expected to look pretty bleak in terms of GDP growth and activity. But despite that, we did see headline confidence rebound last month in the month of June, and we saw the own activity measure also increase. That was strongest for the agricultural sector, unsurprisingly. That has been a real beacon of strength across the New Zealand economy. Those agricultural regions feel stronger, and dairy's going well, horticulture's going well, timber not so much, but many other parts of that primary sector are in good shape. Retail probably at the other end of the spectrum. Last month, retail was definitely the weakest. So we'll be watching for any differences at a sector or an industry level. Inflation pressures also interesting to note in this survey. They haven't gone away completely. The net proportion of firms intending to raise their prices in the coming 3 months still elevated at about 46%. And one of the cost measures in this survey last month increased to an almost 2-year high. So we'll be watching for any change in those sorts of indicators. Right, the reporting season will also continue, so it'll be very busy on the corporate front too. We've got more than 150 S&P 500 companies that are set to announce results, and it's been good so far. We're about a third of the way through, and it's been strong. 80% of those who have reported have beaten earnings estimates, and the earnings growth rate for the June quarter compared to the same quarter a year ago, sitting at about 6.4%, which is above where we were at before the reporting season started. So it's been not too bad. That's one reason why the US market has been performing well. This week will be really busy, so 150 plus S&P 500 companies, plenty more from Europe and other parts of the world too. We'll hear from some of the tech heavyweights with Microsoft and Meta, both reporting on Wednesday, so that's overnight on Wednesday. It'll be Thursday New Zealand time. A day later, so Thursday in the US, Friday in New Zealand, we'll hear from Amazon and Apple. So that's 4 of the so-called Magnificent 7 cohort that are reporting this week. Plenty of other high-profile global businesses will also be in the spotlight. You'll hear from Procter & Gamble, Republic Services, Visa, Unilever, Shell, ExxonMobil. The note that I write that goes along with this podcast will have a full calendar, so look on our website or talk to your advisor if you want to see a copy of that. A couple to watch here in New Zealand and Australia as well. We'll have 2 AGMs in New Zealand that I'll be keeping an eye on Wednesday, Main Freight and Ryman Healthcare, 2 very high-profile businesses, and we're expecting trading updates in those AGM commentaries, so keep an eye out on Wednesday for an update on how those 2 businesses are tracking. Across the Tasman, Rio Tinto is reporting a half-year result on Wednesday, and then ResMed releasing a quarterly result on Thursday. So geez, it's a busy week. There's a lot going on. We'll be watching trade, watching for any developments between the US and Europe, negotiations between the US and China. Expect some headlines there. Outside of that, lots of big economic releases. PCE inflation in the US, that's the Fed's preferred inflation measure. The ISM Manufacturing Index, the all-important jobs report. The Fed meeting, the Bank of Japan meeting. No change expected from either of those 2, but still markets will be watching the commentary very closely. You've also got a refunding announcement from the US Treasury on Wednesday after we get the latest borrowing estimates on Monday. So watch bond markets this week too. ANZ survey in New Zealand and loads of corporate results. 4 of the Magnificent 7, loads of other companies, Rio across the Tasman, ResMed across the Tasman, and Main Freight and Ryman with their annual meeting. So that's all for today, team, but plenty to keep an eye on. So enjoy your week. Take care. Thanks for listening. We'll talk again soon.
For more insights, visit craigsip.com.